the whatever it is, 20th of February 2023. Where did we get there, or how did we get there? Time passes, and very, very quickly, obviously. A few people in that I don't recognise in terms of their names. Welcome to you. I assume you're coming in as a result of the IFP session that you attended on the weekend. Thank you so much for joining us. It's nice to have you here. There's going to be a few things in this show that are very unfamiliar to you. If that's the case, simply ask a question. This is all about you guys, not about me. Hey, Catherine, how you doing? This is a show for you guys to become trading buddies, if you like, with myself, with Ash, with George, whoever's on the show, but certainly with the people who are in the room as well. So don't be afraid to speak up. Don't be afraid to ask questions. I will talk, and I'll talk. I just do, on and on and on and on. But please feel free at any stage to contribute. Just throw a question in the chat. You can come on screen. You can do whatever you like. You can share a chart. Look, Catherine, you can disturb me as much as you like. That's what it's all about. It's all about participating, and you guys are participants. You are our trading buddies simply by being here. Not sure Ash will be with us today because he's, I think, travelling or has travelled overnight back from the IFP event in Singapore over the weekend. He will try, but if he doesn't make it, then obviously I would understand that. George will be with me, and those of you who haven't been exposed to George before, he trades pretty much primarily 5-minute charts, and you're going to see what I do, which is quite the reverse of that. I trade at the moment on daily and weekly charts, so a little bit of a contrast for those of you who are new. I don't really want to trade on daily and weekly charts. It's circumstances prevent me from trading on my smaller time frames at the moment, which is where my real, I suppose, passion for trading lies, on those smaller time frames. However, speaking of smaller time frames, we better take a look at gold at the moment. And the gold charts is not my friend right now because I've got a short on gold and have had since last week. I'm relying on the daily pivot at the moment and this trade line to stop or to prevent the stops, which are at break even. Hey, Paul P, which are at entry at the moment, having TP1 was down here, as you can see, but rocketing in the last 24 hours or so towards that entry level, which was now a stop loss after TP1. All right, those of you who are new, this is a trial of trying to trade gold as the breakout into the opening of London session. So we use the hourly chart and we isolate the range between what's it called? Asia session open and London open. So Asia opens on that bar there, the 2 o'clock bar, or the 0200 bar on my chart with my broker, which means the bottom of that range is there and the top of the range is yet to be determined because the current bar is included in that range, of course, with a very precious little time to go before we open or London opens. This may be problematic. Why is it problematic? Because if prices shoots through here, we won't get an opportunity to trade it. Where would I suggest prices going today? Doesn't really matter. We're trying to trade the breakout. It doesn't matter what I think. It doesn't matter what the charts are telling me at the moment. All we're trying to do is trade the breakout of that London session, the Asia session. At the moment, it looks very much like we're on a journey to the upside. Okay, there's the close. So, pardon me, the high of the range is the high of that bar, 1846.32. We'll round that up to 1847. So that would be our entry for a buy. The entry for a stop, for a sell, which is, of course, what we're trying to do here. We're trying to, if it breaks out that way, we want to be involved. If it breaks out that way, we want to be involved. Now, as I said, I think on Thursday, the very last thing I want to do right now is enter short into the daily pivot, and long at the highs here doesn't enthuse me either. But that looks like where it wants to go at the moment. I can't now place an order there unless it's a limit entry order. I don't want to do that. So what I'd prefer to do is leave this alone at the moment, let price come back into this area, then place the breakout. So I'll do that. I'll do exactly that and place no trade at the moment. I don't want to be involved when price is exactly where we need it to be in terms of the breakout level. So price comes back into the range, happy to place the order. If it doesn't, then we've simply missed it. Simple as that. FOMO is not one of my traits as a trader. I don't care if I miss a trade. Well, that's not completely true, but it just doesn't affect my psyche in any way, shape, or form. Right, so we'll leave that for now. Those of you who are involved in the trade that we took, can't remember when, we traded this bar here. So that was last Thursday or Friday. Thursday into Friday. Nothing to do here. TP1 has been hit. So all we're interested in now is, sorry, there's a few people in the waiting room that I'm trying to admit. I just have to fix that up. And there we go. So those of you who are in that trade, if you took profit at TP1, happy days, and move your stop to entry, it'll only be a winner. The question is how much. I'm hopeful that we will get held up by this trade line and not taken through to our stop loss, which is at entry, as I said. And there may be an opportunity to climb back into this. If you are of the opinion, of course, that gold is still on a downward trajectory. I am of that opinion. And the reason for that is because I've got a structure that tells me so. I've got this big double top here, yawning double top, that we've spoken about many, many times before. As soon as it appeared, we were looking to trade it short, and that worked out pretty well. But of course, we've then had was pretty much a V-shaped recovery until we hit that level of 1960 or thereabouts, and then since then we've come back off it. I'm tipping, and it's very, very difficult to say that given the momentum that I feel is in the market at the moment. There seems to be people queuing up to buy gold and silver, and I can only agree with that at the end of the day in terms of a bias, given the circumstances that we are faced with in the world today. Yet the chart's not telling me that yet. Chart's telling me we've got a double top potential lower high, and I want to trade it back to the bottom of this range. So that's why I'm more than happy to be short at the moment. Our stop may be a little bit tight, and that's for a reason, because that potential momentum to the upside is definitely there. Righto, so let's leave gold for now. I'll come back and have a look. Somebody might even tell me if we come back into the range, maybe down to about 1840 or something like that. And if we do, then as I say, I'll trade that breakout. It looks very, very bullish at the moment, I'd have to say. We'll see. Righto, so those of you, again, who are new to the show, g'day, Lewis. How you doing, mate? Yeah, look, gold analysis is very, very interesting at the moment. Lewis is telling me he's a short-term bull, and wow, looking at this chart, why wouldn't you be? But as I say, and I've been through it, I still think until that double top is taken out, and now the lower high, until that level's taken out, I'll be selling every time I get the opportunity. 1806 is your target. Short-term bull still 1806. 1806 is around about here somewhere. Righto, let's put that in. So Lewis is a very good judge of these instruments, I've got to say. 1806 is about there somewhere. So you can see the support it's been, resistance it's been through here. Wouldn't argue with that. I'm hopeful we can stay in the trade till that happens. Today is the new moon. Astronauti looking for a long 1 hour gold form cup and handle. Okay, thanks, Sweet. Let's have a look at that. Sweetie's telling us, and those of you who have got no idea what Astronauti is, it's an interesting method of trading or method of recognizing what markets do in relation to, I think it's the sun, maybe the moon, Astronauti, certain astro. It's up there somewhere, right? And look, I don't disagree with this in any way, shape, or form. I'm a firm believer in if it lines up and it lines up often, then it's right. That's all that matters, right? At the end of the day, if it keeps repeating, then it works. If it works, it works. That's all that counts. So if Astronauti is something that works, then what the hell would you do ignoring? Why would you do that? Simple, really, isn't it? It's the same with any system and any strategy. Anything you find that works repeatedly or more often than it doesn't, it's okay. Trade it. It ain't rocket science at the end of the day. Working it out is the hard bit. And when once you find a system that actually agrees with you, agrees with your the time that you have to spend in front of the charts, all of those things come into play. But if you find one simple thing that gives you money time after time after time after time, you don't need any more than that. It's about all you need. So Astronauti, I like it. There's also a method that relies on the moon phases, and I believe that there's something in that, right? I'm not ignoring it for 1 second. So anyway, Astronauti is telling us that today is a buying day. Is that right, Swee? And of course, yep, okay. And of course, the chart pattern that Swee has pointed out to me is the cup and handle on the 1 hour chart. Now, let me show you, those of you who don't know what a cup and handle is, let me show you what that is. So it's exactly as described. There's the cup and there's the handle. Now, that is a recognized chart pattern, if you like, that suggests that price is going to go long today because it's a reversal pattern. So the trend or momentum, if you like, has all been down in the past couple of weeks, certainly. And now we've got that potential reversal pattern. Well, it's a reversal pattern. Whether it plays out or not is another story. But I would suggest, and all reversal patterns to my mind have what we call a neckline. And this cup and handle, the neckline of which is here, and it's been broken and it's been retested. So I totally get the directional bias on the hourly chart. Where's it going to? Probably around about my stop loss area, I would imagine. There's another level up here, of course. But yeah, where it goes to today, I don't know. If that doesn't work, and of course, chart patterns don't always do exactly as you anticipate they will, I would love to see this come back under here before it gets to there, right? And then retest that level. And if that were the case, then I think there's good reason to add to the position, the short position, and trade it down to there, get some profit in the bank, or maybe even there, get some profit in the bank, and away you go. There's no US session today, which is interesting. So I would suggest that if you are going to trade today, then the best time to trade would be in the next hour or so. So hopefully something sets up for us. I will keep my eye on gold. As I said, if somebody could just draw my attention to the fact, if it does pull back into here somewhere, then I will place that breakout order again. Well, for the first time, actually. All right, let's leave gold for a bit and go to my go-to, which, of course, on a Monday is all about looking for game changer or key reversal bars. I did a session on this yesterday in the Sunday Market Update. So those of you who are in Sunday Market Update, I won't go through the whole process again. I'll spare you that. But it is kind of important to, and certainly those people who are here for the first time, for you to understand that Euro Swissies. Oh, actually, I better update you on those, hadn't I? I've got a few orders in the market. Let's go there first. Euro Swissy has just been triggered. Now, I've got a trade short on Euro Swissy, or an order short on Euro Swissy, which I haven't posted in the Telegram group. Now, what this is all about is pretty much going down the time frames. The monthly time frame is telling me that we're in a downtrend, and I've got no qualms or questions about that. If I go a little bit wider on this, you'll see back in 2015 this extremely wild candle, which was, of course, the decoupling of the euro and the Swissy. Those of you who don't know what that means, I would suggest you go and have a look at that particular scenario. The Swissy and the euro were coupled, or the euro was coupled, or vice versa. I can't remember which way it worked, but the Swiss National Bank, without any notice at all, on this day, which I think was early January 2015, in the new year, just begun. This is a monthly chart, and that candle represents 1 month. I can assure you that 3,500 pip, yes, 3,500 pip movement happened in far less time than a month. I think it went 2,000 pips in a couple of hours or something like that, from memory. Fortunately, I was not on the wrong side of that. I wasn't on the right side either, but it didn't affect me in any way, shape or form. But brokers went to the wall. People had to sell their houses, all sorts of repercussions of the Swiss National Bank decoupling to the euro. And the market just went smash, bang, you name it. Everything was coming off. It was just incredible. So at the end of the month, it settled down, and that's pretty much 50% of the range, right, where it ended. And since that time, into 2018, we had a rally back pretty much to where the decoupling began. Since then, however, it's all been downside. We had a good, strong conversation when price got to this level in this show, suggesting that there would be a rally off this level. And certainly there was for about 5 minutes. It didn't last too long. And since then, every single time it hits a resistance level, like this resistance here, it gets smashed, gets hammered. Back to this resistance level, got hammered, back to this resistance level. Where is it there? Maybe we haven't quite reached it. But I'm of the opinion that this is ready to go short again. And I base that on two things. The weekly chart. This trade line here, which is really not relevant on the weekly chart, it's more a daily chart, but I can move that to here and go back to here. Let's do that, actually, because I need to prove the point. Let's go and keep that on the weekly, and we'll put the daily on where it belongs. So, sorry, other way around. Let's move that to the weekly. And what that then shows me, it's hard to find that low there on the weekly, but it shows me that we've had a dominant break of that trade line, and we've had almost a retest of that trade line with a bull bar, yes, but is it a bull bar? it's actually come off that horizontal level, right? So to me, that's a rejection of that level and potentially the trade line as well. So that's why I'm keen to get short here. And I've got this big rejection bar on Friday, and that's what we're trading at the moment. So with any good fortune, we'll go through this low. So we'll create a new low, which will come down to the bottom of this former range. And that's why I'm in that trade Euro Swissy short. The entry level, if you wanted to follow it, we're pretty much exactly where we are. It's 98 or 0.9871. We've been slipped by 0.1 of a pip. I've got a stop loss at, was it 99.26 by the look of that? 1.9926. Yep. And we've got a first take profit at 43 pips. I'm going to close 1/3 of the position at that point with the sole intention of coming down to test these lows. So 1/3 off here, probably take another third off there, and then leave the final third to go down to the bottom. That's where I'm at with Euro Swissy. I've also got two other orders in the markets. Don't think these have been triggered or shouldn't have been triggered. One is Aussie versus the CAD. Now, Aussie versus the CAD, forget the fundamentals around this. No, don't forget the fundamentals around this. Put them to one side because I haven't got the fundamental guru in the room, and that is, of course, Ash. So he can't tell me what the COT data is saying. He can't tell me what the seasonals are saying, but I can tell you what the chart's saying. And the chart's saying to me, this is the weekly chart, that we've come off the top of a broadening pattern, which to me is simply a range. It doesn't matter whether it's going up, down, sideways. As long as price is reacting off it, that's to me a market structure. So you can see down the bottom here that we've got massive rejections of that level. And every time it hits the bottom, it wants to go longer or it wants to go higher. Same here. Every time it hits the top, it wants to go short. So why is this going to be different? There's a famous saying in trading, this time it's going to be different, and it never is, right? So that's the thesis upon which I'm working to trade a short here. But it's not the only reason. The other reason is I see a resistance trade line through here, which gives me a break of a trade line, break of resistance, hit another resistance level, consolidated, came back underneath the trade line, and then retested. I'll go a little bit tighter so you can see that. Then retested it with this bar here. So that automatically, once I've got a directional bias given to me by the market structure, and I've got a candle pattern that I like to trade, then it's an automatic entry underneath that bar. Got my stop loss above the monthly pivot, which I think is probably conservative and probably wise. And as Lewis pointed out, there's a double top sitting here as well. So I've got every reason to think this is going short. And the good part about having a structure in place suggests to me that the reward is going to potentially be very, very good if I've got the direction right. And these are ultimate reward down here. That's what, 600 pips away. It's not 6,000, I don't think. Yeah, 600 pips away, and our risk is 160. So 4 to 1. That'll do me if we can get hold of that. And of course, we look to build on that position as we go. So the entry level on Aussie CAD, if you wanted to follow it, is 0.9195. I've got a stop loss 160 pips above that. I'm not going to try and work that out. 9355, I think you'll find it is 0.9355. And I'm going to take my first profit at 90 pips, which is that level right there, where you can see it clearly, 9105. Why? Well, I think it's been resistance through here. It's been support through here. I think that's the right level to take profit. And again, I'm going to close a third. If I get a pullback at that point, I'll look to build the position and hopefully get down to here at some stage in 2023. Maybe. We'll see. The final position that I've got in the market at the moment is pound versus the dollar. Pound versus the dollar is not dissimilar in many ways to euro versus Swissy in terms of the levels at which we're trading or which we're attempting to get into the market. You can see here that this level is super, super strong. I've got it marked as 120, 186, but it could be anywhere in that area of 121 to 122 probably at the end of the day. But you can see the price has come below it and come back to it and is currently rejecting that area. Now, obviously, this could be a false break of the bottom of that range, if you like. It's a clear range. It's a box range at the end of the day. And we're either going to, famous last words, we're either going to bounce off this level or we're going to come back into the range, in which case I would switch positions and try and trade it back to the top. But currently, if I go to the weekly chart, what we've got, and you've got to pick that level, what we've got is a resistance trend line, or trade line, rather. We've bounced off the top of it once. We've bounced off the top of it twice. It is a little bit tricky at the moment, I've got to say, and the daily chart is giving me the hint in that we've broken support and we've retested that level. So my thesis in trading is always, if these bulls are not going to take over here, as this chart suggests they may, then something else is going to happen, and that something else is going to be the opposite of the former, and therefore I'll be looking to trade this short if price comes to here. If price keeps going, who cares? Doesn't matter. But that's the whole premise of the trade. So I've got a break and a retest. So it's a potential for an A, B, C down to here somewhere. They're the orders that I have in the market. I've got a few other things that I'm looking at, and I'm going to deal with those upcoming. But in the meantime, let's say good day to George. Hello, buddy.
I am here. How are you doing?
Yeah, look, going very well, mate. Had a good weekend, nice restful weekend, and I see a few things in the market that are keeping me busy at the moment. So what more do you want, really, at the end of the day? How about you?
I'm well. I'm doing very well, thanks. It's an interesting start to the day. I mean, that US holiday. Hey, Louis, how you doing? That holiday that you mentioned, it's for me, and I guess for anyone trading, but also trading the lower time frame charts, you got to think of it as a big red news announcement. So you got to be a little bit careful with any trades that you are taking. So, I'm a little bit careful. If I don't get any setups, by the time we've gone like a couple of hours into the UK session, then I'm really just going to be cautious. Even say that for
so you won't go and play golf or go to the hotel or anything like that. You'll still stay in front of the charts.
I'm pretty boring, Jeff. I'm gonna stay in front of my encyclopedia of charts, my PowerPoint slides, and go through them again and just refresh what's taken place, update them. So I'm basically training myself, right? So I'm in the market, but in front of my PowerPoint slides. So pretty boring.
There's different ways to trade, George, isn't there? You can look at the markets and be in front of the charts and actually look for trades, or you can go back and look at trades that you've taken, or you can analyze what you've done last week or whatever the case may be. That's trading. It's still trading, right?
It's still trading, and I do a lot of that. So, I mean, if you look at how I spend my time, I spend hours and hours on charts that I've kind of downloaded what's taken place. And I'm always going back and saying, even if I looked at it last week, how else could I have traded this within my strategies? Did I miss something? Is there something happening that I haven't caught on to? How can I refine, so when it appears before me, when I'm back live in the market, I just execute. So I'm pretty busy, whether things are happening or not in the actual live market. So
actually, on that subject, if I can get a value from you out of maybe there was a time when you weren't as studious, right? Where you didn't go and do all of that work.
Yeah.
What do you think the value of that is in terms of, I don't know, is it the difference between success and failure? Is it a 20% difference in your ROI? How do you describe that?
It's been chalk and cheese, if I can put it that way, in terms of my ROI. It really has dramatically changed my returns. And I guess that's at some point during this process, that's when I became assured that I can make a living out of this, and really out of this process. Because before then, you're making money, you stop blowing accounts, things are moving forward, you're kind of happy, percent here, percent there. But, you always kind of know there's got to be something more, if I can find that edge that everyone talks about, there's got to be more. And how do you find that edge? Now, looking back, sounds very clever. Looking back, I found the edge by going through charts over and over again. Then eventually it's like, hey, hang on a second. I've seen this 1,000 times, 100 times, whatever it may be. It's like, being someone who's really studious about how the mind works and how we absorb new ideas. You might have heard, or read a book 6, 7 times and then you get it. But, I've done
That's me.
I've done that many, many times. And sometimes when I'm like, and it sounds funny, when I'm like on the 8th or 9th read of a particular chapter of a book, it's like, hang on a second. How come I've missed this? This is the key. This is what it's all about.
Yep.
And that's what happens when you go over your charts over and over again. And it completely transforms your return on investment. I don't swear, but if I had to swear, I would swear by this process.
Yeah, look, we've known each other for quite some time, and we've both seen each other go up and down, across and sideways, and then that light bulb comes on. And I think for you, that's very much been a part of that, where you've discovered, if you like, that the more the more work you do, the luckier you get. Right at the end of the day, that's it. It's a famous saying, but it's so true. George appears to be frozen, or is mesmerised by that question. One of the two. I would suggest that the frozen part is the real story. So I'll just chat amongst myself until he comes back. He shouldn't be too long. So I'll go on to a few of the things that I'm looking at outside of my watch list, and they are involving the euro mainly, I've got to say. But there's one that I didn't mention earlier, and it's Kiwi versus the Swissy. Now, the reason I'm looking at Kiwi versus the Swissy is not because I have a particular bias immediately, but I've got it at a very, very strong level. I'll come back to that because George has rejoined us. I think, he has. I can see him moving. How you doing, man? You okay?
I'm all right. My Wi-Fi has just gone down. We have those interminable power cuts here, but I've changed to a different device, so I think I should be fine. It's just that the other laptop's not yet connected, but we can talk. So I think, I was just saying that whole process of call it self-education is really key. And there's guys who are subscribed to the processes that I've got, the coaching, the Wednesdays at the market. And one of the things that we do when they come to their coaching sessions, they are now starting to produce their own PowerPoint slides. And we go through that and you start to see things on it. I mean, as recent as this morning when I was out racking, so that's my exercise. Put a rucksack on your back with weights and walk. I was just thinking about one of the signals that I trade. So I always say to guys, make sure you see the chart pattern, double top, double bottom, wedge top, wedge bottom, and then wait for the lower high or the higher low, and then take that signal. And I've been reviewing something over and over again. I've been saying to myself, 50% of the time that I'm taking those trades and everything is set up, there is always a failed breakout and pullback, and then I get another execution. What am I missing? And I got up this morning and I just flipped through charts. I just went on to my PowerPoint, and I just put the high, low, double bottoms, and I'm flipping through and looking and saying, what am I missing? What am I missing? And then I realized, or I noticed that of those trades that I'm taking when the higher low is set up or the lower high is set up, there is an outside candle. And with that outside candle, if I take the trade, so let's say we have a double top, and then we have a lower high, and I'm looking to get into the market. If that signal becomes an outside candle, a bear candle, and I take the break of that lower high, but it's an outside candle, 50% of the time, there is a pullback that comes back to test the breakout point or maybe go against me. And then I'm in trade management mode. I'm coming out of trades and I'm executing them again. And I'm saying, but hang on, the pattern should be valid, but there's something I'm missing. The other 50% of it, the same structure, but I'm getting in a little bit earlier. I get the failed breakout above the candle that then becomes lower high, if that makes sense. So if I'm taking that failed breakout before it becomes an outside candle, I'm a lot more successful, because even when the breakout pullback comes, it doesn't get back to that earlier entry. That earlier entry, for it to work, I still need my wide stop, my measured moves. Mm-hmm. So it kind of just, it's kind of like slaps you in the face. And I'm saying, but hang on a second, same execution. If I take the trade early, I'm more successful. If I wait for it to become an outside candle, then I have a problem, because my mind starts to switch and say, hang on, George, failed breakout might go against you, come out of the trade. You come out of the trade, it sets up again, then you jump it in again. It's just a little bit more stressful. So now for me, it's all there in my charts. I'm saying, unless I can take an earlier trade, which I can take either as a failed breakout, or if I go to the 1 minute chart and I look for that reversal candle as that outside candle is forming, same thing, either as a failed breakout or as a stop order entry in the market on 1 minute, then I'm more successful. So immediately I just said, well, stop taking the outside candles, irrespective of how strong they are, because I don't want to see through the pullbacks. Rather just wait. I don't want to see through the pullback of the outside candle. I'd rather wait for a much bigger pattern. So immediately I eliminate all the losing trades. And if I don't take it early, I'm going to wait for 6, 7, 8 more candles and still be a lot more successful. But that's coming because I'm going back to my charts and I'm asking myself, but there's something that I'm missing here. And if I just flip through, I'm seeing hundreds of patterns, just quickly bang, 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 and it's confirming for me what I should be doing. Then I refine the strategy. So in terms of how to improve your returns, it's going to be the way. It's a lot of work, but then the US markets are closed. What else am I going to be doing? So yeah. I've got the time.
Use the time, exactly. And, weekends are the same. When markets aren't open, it's a very good opportunity to go back and have a look at those. I've got a thing screaming in my head saying, I get exactly what you're saying, because I love to trade lower highs and higher lows as reversals, as you know. But I've got a funny feeling that some people in the room may not grasp exactly what you've just said. Are you able to show us an example of that?
Yes, for sure. For sure.
Great.
Let me just go on to. I want to just open up the.
And I think while you were talking, I'm imagining in my head that outside bar, and I don't use that as a filter for my own entries. It's simply the potential of the bar, maybe at a confluence area as well. I would suggest, and the first thing that comes to my head with that outside bar is that's either going to be an emotive move, or it's going to be something that needs to be addressed by the other side, if you like. An outside bar means either as I said, an emotive move, which needs to be addressed. And what I mean by it needs to be addressed is those on the opposite side of that need to have a response. And that's probably why we're seeing the pullback off the bottom of that bar, if you like, if we're going top to bottom. But let's go through your explanation, because without images, it's very, very difficult to get that across.
So we'll flip through and find probably a clearer one. Let's start here. So this is the open of the Hang Seng 50, and as we know, this is the opening session, right? 9:15 a.m. Singapore time. So the US session is obviously important. So we had a wedge top, the US session, gap down, pull back. So if you're going to take that trade, you can take that trade, but you need a wide stop. Now, taking that trade, that's a lower high after this wedge top. So you've got the wedge top, but you have a lower high. So that you can take. But if you don't take that, and when you see the outside candle, that's a candle that you don't want to take. Okay, you want to wait for a breakout of that and then another pullback, and that comes down quite here, a bit lower. Alternatively, take it a little bit later. But in terms of talking about the outside candle, you don't want to take that at all. Well, I don't want to take that. I used to take that and then agonize through a pullback. Let's find. Okay, here's another one. Gap up, we have an outside candle. If you take that outside candle, okay, it's a low probability trade, because when you get a breakout beneath the outside candle, you're going to have to wait for a potential pullback. And we do get the pullback. So if you're taking that outside candle, you would be stopped out. I'm just flipping through to find a nice lower high that we can show the guys. But these are outside candle examples. All right.
But I think, as I said, those outside bars are, by definition, big moves, right?
Yes.
And they demand a response from those on the other side.
That's it.
Obviously, if you don't get the response, then okay, you've missed. If you don't take it, you miss the entry. But there's always going to be a retest of some kind. So you're going to get it. You're going to get a second chance.
So here's a classic one in terms of what you're talking about. So just before the open US session at the wedge top, so it's not fully shown, but that was a wedge top 1, 2, 3, gap down. So from the wedge, you always want to see the lower high coming out of that. So the bears accelerated down at the open. We had a doji. We pulled back and we had a higher high. Okay, so the high of what became the outside candle was a higher high. Now, because it became an outside candle, you don't want to sell beneath it. You want to wait for a breakout pullback. So there's a breakout beneath it. There is a pullback. Now here is a classic illustration. Either, and this is me now updating my charts, I would take it here, which is a 1-minute entry. So you can, because I've seen the pattern. I'm waiting for the lower high. Here it became an outside candle, fine. Jeff is saying there has to be some kind of a response. Bears created the outside candle, little bit of a follow through, a very weak pullback by the bulls. And I'm waiting for that to fail and give us a lower high. We get an inside candle right here. And I'm not gonna trade that inside candle, but I'm still waiting to see if I get a way to jump into the market. Here now, this is what we're talking about. Let me put it on. Hopefully it doesn't disappear on presentation. Right. So here, as the market is going up, I'm still looking for a way to jump in and sell. I have a choice. Either I'm going to take it. This is a failed breakout above this inside candle in the lower high. Either I'm going to take that as it starts to come down and you can take that as a 1 minute entry if you're quick enough. You don't have to do that. If it comes in and closes before it becomes an outside candle, that's a classic, that's a beauty. That's the one that you're going to teach your kids about, right? Because that would be a nice one. So if it closes here, you just put your entry beneath here and your stop above here. But it became an outside candle. So if it become an outside candle, originally I'll jump into that trade and then agonize. Usually get 50% of the time, when I get a pullback, it might come all the way up here. And when you're saying, oh my goodness, I should not have taken that, let me get out. When you get out, it creates a reversal for you. Then you say, oh man, I should have hung in there. But to avoid that, I got to realize that if it's become an outside candle, leave it. There's going to be a breakout, pullback, low one for you to jump in. So we got a breakout, we got a pullback, we got a bull inside candle. I don't want to take that. Another bear breakout, pullback, a bear inside candle. Say, okay, this is getting quite interesting. If I get any test to the EMA, I'm going to look to jump into the market. Okay. We get another bear breakout, or, it was a bear candle, failed with that tail at the bottom. Then the bulls try again to break out above this pattern. As the market starts to turn, you can jump in if you're quick enough on the 1 minute. Okay. Or you can take the break beneath this candle. It's not an outside candle. Okay, it's got tails on it, so it's a low probability trade, but that's fine. Your stop is whatever, way up here or 50% somewhere down here. It becomes an outside candle. You don't want to take that because you're buying selling beneath an outside candle. You may break beneath it, may come back to test it. You don't want to do that. Wait for more information. There we go. Breakout, pull back, and then you get a classic inside candle. You can sell beneath that. Your stop is above that outside candle. Or if you want to take that, there's another one you can take, or another one you can take. The only problem is you go low, of course, is your stop is still up there. But that's it. I think that's a pretty decent enough illustration.
Yep. Look, you're going to have people, of course, who are going to say, "But hang on a minute, you've just missed the first part of the move." Who cares? You get the rest of it, right?
Yeah, because if the reality is, you're gonna say you've missed the first part of the move if you haven't seen enough of the charts. If you've seen enough of the charts with these lower highs and outside candle, you're gonna realize that you'll make more money more comfortably if you're not trading beneath it. But if you're able to take it earlier, fine, as a failed breakout. Okay, as a failed breakout. If you can't, wait for the pullback, because you will lose a lot more money by selling beneath the outside candle, because it's a trading range. The outside candle is a trading range. In a trading range, you want to sell beneath it. You want to wait to see if there's a breakout, there's a pullback to test a breakout point, and then you can jump in. So that's the kind of thinking that you're going to be going through. Well,
I like it, mate.
There was another one. So, I mean, I could bore you with it, but the point of this, you've got 1,000 slides that once you've worked through on the weekends or when the markets are closed, now here is telling me there's 93 slides that have got outside candles that I can just flip through, and get a sense of what happens when I get outside candles. Okay. Outside candle, don't trade it, wait for the pullback, and you find other opportunities. So that's kind of where I am at the moment, Jeff. Nothing setting up as yet. Oh, I'm waiting.
Mate, you do every single week that you show me all this work that you've done. You shame me. You absolutely shame me, because it's just a fact of life at the moment that I can't spend the time, but truly, you've taught me so much as to how to. Well, that's a journal, right? At the end of the day, it's a journal. It's something that we all need to have, no matter at what level of trading that we are, because you cannot remember anything apart from everything, right? You just can't remember what you've done and what candle pattern worked, or whether it worked in this situation, or whatever the case may be. There's only one way to do it, and that's the way you're doing it. And I absolutely applaud you for doing it. And thanks for pointing it out to me, because once I get back to full-time trading, guess what? I'm going to take a leaf out of George's book and do exactly that.
No problem.
So you're doing homework this afternoon because there's no US session, and that's exactly what you'll be working on. And you don't really care what happens for the rest of the day, right?
No, I don't. I mean, I've got the charts open. If anything sets up, it really has to be absolutely pristine, if that makes sense. Otherwise, there's no need, because if I wait for it tomorrow, there will be much better entries. Let me just show you this quickly. Just before we go, I mean, just on
guys, take advantage of the fact that George is in the room. If you've got any questions for him, feel free. It's all about sharing this program. So please ask.
So on the Hang Seng, as far as the daily is concerned, and the pattern becomes clearer and clearer. So these are some of the tools of price action trading, trying to find these invisible, unseen levels that are on the chart that will kind of point to us where the market is likely to go. So we had that bear breakout, and every time I see any breakout and a pullback, I'm interested to say to myself, where is that pullback likely to go? So if I look at, just double click on this little Fibonacci retracement, the market here, that bear candle, there's our breakout, and that's where the breakout ended and where the pullback. So just from that breakout, the bears will get their satisfaction if we get to the measured move, which is down here. Okay. Then I could also say, well, just these three candles here were the first leg, and there was a pullback. And then the market carried on, and there's another pullback. So if I looked at that right from the initial point I had, there's a first leg, and there was a pullback. So we got to test that. But then the market went sideways, and we carried on, and that bull candle could also be what the bears are looking at, okay, in that tight channel. So there's a possibility. You could also say from this high, this is one leg down. It's got two parts, two legs in it. So, it's a subdivided leg. It's a spike. It's a bear spike. It's a bear breakout. And there is a pullback. And the second leg is made up of this tight bear channel. The goal for the bears is to get into this level. This level has got many things happening to it. So there's a big round number, 20,000 down here. It's also the level of bulls breaking out. It's the top of December, double top. So lots of magnets pulling the market down here. But then of immediate interest. So that's kind of what I'm seeing on the bigger time frame. But then when you come to the day, if you look at the tight channel that we've been in, after this trading range, bears controlled it. Bull pullback, bear breakout. Bull pullback, couple days of bull selling. Bull pullback, bear breakout. So today, what can you expect? Even if the market accelerates up to test, that level, which was a 21,000 level, test the EMA, test the channel. On the 5 minute, if it goes up, of course you can buy up, and we'll look at some opportunities that were there. But then you got to be cognizant that when we get to these levels, the bears, every time the market go to the top of the channel they're creating, they sold off. So if you get a decent enough reversal pattern here, you got to look to sell. You may not get it today. Well, on this day, you didn't get it. On that day, you didn't get it. But because you're in a bear channel, you're rewarded with follow-through selling in the following day. So if nothing happens today, back to what we're talking about, nothing further happens. I look at some of the opportunities that were there earlier on. Then we just get up tomorrow and look for ways to sell. If we go down to the 5 minutes, and I'm going to try and click on my 5 minutes. There you go. So earlier on, guys, we're looking at this in the morning. There's a gap up, and the way we trade it, when you see a gap up, bull candle, good for the bulls, gotta wait for the pullback. So high, low, double bottom after a gap up, fantastic. Then you wait. So the pattern is a higher low, double bottom after a gap up, which is also a double bottom at the open. So fantastic. Now I've got to find ways to get into the market. There's a breakout pullback high one. That's a trade that you can look to take. And if you're keen to take 1 minute trades, you can take that because any other setup's a bit late. Or after the open, your stop is far, right? But you're trading small, so that's fine. But you're doing that, you are aware of what we saw on the daily. This is a potential level of resistance. So even if you didn't take any of that or you're not in the market, you come in and you have a look and say, okay, there's a wedge top coming to that level of resistance that I've seen on the daily, the bear channel line, that we saw, that big round number that we saw, 21,000. And now in here, for the first time since we got to test it, we have the bears breaking out beneath it. Fantastic. So all of this is good for the bears. But what I want to see is from this top, the market coming back and creating a double top here. Okay, so the bulls are going to try again to break above that, and the bears, they've got to show strength. If they show strength, lower high double top after the wedge top, fantastic. Then I'm going to look for a lower high pattern to sell. Now, will we get it today? The more we go beyond the open of the UK markets into the afternoon session, no moves in the US, there's no need to rush to it. So even if kind of trickle down today, I'm not going to just jump in unless I see bear strength. But tomorrow I'm going to be keen to see whether we're going to sell off on that pattern, just continue down in the tight bear channel, because the bears want to get down here, maybe give us strength and just keep going down. So I can tell stories on charts, Jeff.
Yes, you can. When I listen to your analysis, George, you are so akin. We're kind of like brothers in the way we look at charts. There's no question. Yet we trade completely differently, and that's fascinating. And often come to the same conclusion at the end of the day, and come to the same areas of exiting trades, etc. Catherine, and I'm not sure if you can see your chat. I think she's asked you a question, but I'll ask you a question on her behalf. And I'm curious about it myself. Do you actually take entries on a 1 minute chart?
I do. So with the 1 minute chart, you have to be clear why you're doing it. And the best way to explain it is, for example, Jeff, you trading off the weekly, and if there's a setup that you want to take, you can go down to the daily and say there is an earlier setup, and you execute it from there. But your trade management, your stops, your take profits, whatever you decide on the weekly, it's exactly the same thing. So I'm trying to get into the market, and there is a potential that the market may create an outside candle for me, and now I don't want to trade below that outside candle. So I'm trying to get in earlier. And I don't like taking limit order trades. So market is going against me, get me into the market, hoping it goes down. I would rather at the same level go on to the 1 minute and see a bear candle, a reversal pattern on the 1 minute, and execute at that, because at least at that level, the market is starting to go in my direction.
Yes, the momentum is in the direction, right? But and here's, I think, the crux of the question from Catherine. Let's say that 1 minute candle closed on its low and you want to go short.
Yes.
You've got, a microsecond to get in the trade, or do you wait to a tick pullback, or how does that work? How do you execute the trade?
Let me tell you what the voice in my head says to me. I hear voices.
Yes, please.
So when I drill down to the 1 minute, I've said to myself, George, you clear where the stop is going to be. Okay. So I've got it at the measured move, either measured move of the first candle, quite high up, or whatever other pattern I've seen. So that's clear. So you are now just waiting to see that early execution. If it sets up, you take it. We're not questioning it. We're not waiting. We're not thinking. So as soon as I see that candle, boom, sell at the market. I'm not going to wait, hesitate, doubt. That's it. If it goes against me, I'm going to rely on the stop. That's it. It's a seamless execution. There's no more thinking further there. And as soon as I've taken it off the 1 minute, I am out of the 1 minute. I put the screen and the charts back to the 5 minute because that's where I'm going to manage my trades on. The problem is if you start, and it's happened a few times, if you now get fixated on the 1 minute, you start to manage it on the 1 minute, you're going to close trades that are beautiful. Leave it, it's done. Go back to the 1 minute, rely on your stop.
I think you can relate that to every single time frame and going up, can't you? If you find your execution on an hourly chart, then leave the bloody thing alone and go to a 4 hour or daily and just let it do what it needs to do. You know, you've done the analysis. Why would you change your mind unless there's been a massive news event?
And that's the key point. You've done the analysis. You are looking for the execution. That's it. That's all it is. I see the question here, why the stop was way up at the top of the outside candle. Okay, so if you take in the breakout trade, remember the outside candle is a trading range. And that's probably the best way to think about it. It's a trading range, and I don't want my stop anywhere within a trading range. So the stop has to be outside the trading range. That's why if I'm going to take the breakout and the pullback off it, the stop is above that outside candle, so outside the trading range. That's the logic behind it.
Was that Catherine's question?
Yes, that was Catherine's, and I think she says she got it. No problem, Kath. Thank you.
Okay, awesome. Mate, I can't thank you enough for today. It's been enlightening in many, many ways, and expect a phone call from me at some stage on that amended or adjusted lower high. That's really, really cool. I like that.
No problem. Thanks, man. Really appreciate it. And thanks to everyone, and we'll catch up again.
Mate, what have you got this week in terms of presentations?
Yes, thank you. So for the guys who are subscribed to it, we've got the Wednesdays at the market with George. Hang Seng 50, we trade the first 2.5 hours. And the S&P 500, we trade the open from the open of the New York Stock Exchange. So 10:36 for 2 hours. Excuse me. And then live trading profits is only 15 minutes. That's it. Quick in the market, in and out, deep analysis, and we're all gone home. That's what I got, mate.
I like it. Brief, but beautiful. That's what it's all about, right? Mate, thank you so much. Have a wonderful week, and look forward to catching up next week, man.
Thank you very much. Take care, and cheers, everyone. Bye-bye.
All right, fantastic stuff from George. Really, really enjoyed that. I hope you got something out of it also. Gold. I'm going to go back to gold because I think it has come back inside the range. Has it not? Yes, it has. So now we're back inside here. I'm prepared to actually take that trade. So I'm going to trade long here. Am I going to move my entry up to here? No, I'm not. Because I think if it goes back here, it's going to take that out anyway. So I'm going to use exactly the same parameters. And again, for those of you who have not been involved with trading buddies or the way that we do this, it's very much in trial mode, right? This is not a proven way to trade. So you've got to bear that take that into account. And if you are looking to trade it, see how I'm trading this 0.03 lots, which is next to bugger all at the end of the day. So please, 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 if you are going to trade this, consider that. It is not a proven system. I like it so far, but it will have its moments. There's no question about that. So we're going to go long at 1847. Is that right? I think that's right. Higher that bar. Yep. 1847 will be our entry for the long. And I'm going to have a look at the NASDAQ shortly, Lewis, if you're still in the room. Entry or stop loss for the long will be the low of that bar, 1837. 1837. And we'll place that order now. Now, if that gets triggered, there's no need to place the short, but we'll place the short as well. Exactly the same risk, which is next to nothing. And that will be a sell stop. And the entry level will be 1847. Sorry, the low, 1837, was it? Yes, 1837. And the stop loss will be the high of the range, which was 1847. I've got a funny feeling I got that wrong on the buy, but I'll go back and check it. Buy stop. That's in the right place. Sell is not in the right place. Oh dear. Oh, is that the stop loss? That's the stop loss. Okay, that makes sense. There's the sell. All right, we're all good. Again, for those of you who haven't done this before, if the long triggers cancel the short triggers cancel the long. In terms of a target, now the best way to do this is just to take profit at the first, Ash calls it contact, I call it support or resistance. Today, for me, that's going to be MS1 here, or DR1. And for the short, it's obviously the daily pivot, but I just can't talk myself into that. So I'm going to take profit at 1830 if we go short. If we go long, then I'll take it at DR1, 1850, which is, poor reward to risk, but if they keep producing, then that's all that counts at the end of the day. Righto, so that's gold. NASDAQ. Let's have a look at the NASDAQ. Now, the reason we're having a look at the NASDAQ is because Lewis has got a strong opinion on the NASDAQ. I had a strong opinion on the NASDAQ, I've got to say. I'm not sure at the moment that I have one right now. Weekly chart's still screaming at me that we're in a downtrend, right? Has that reversed? We've got a double bottom sitting here. Have we got a higher low? Answer no. What does that mean to me? Well, that means to me that I think there's possibility that we'll create one. And if we do, perhaps it's going to be around about the monthly pivot area. So that makes it kind of interesting if you want to trade the retracement, if you like, if this is reversing. So you're either trading the retracement or you're trading the continuation of the downtrend, if you see it that way. Either way, I think we're at a resistance level. So if I put that line across there horizontally, you can see that there's a bit of a zone in here. And that's exactly where we are, right? We've bounced off that already. If I zoom in a little bit tighter, you can see that we've got two inside bars on this rejection bar. I'll call it rejection bar because, okay, we've got a very, very strong bullish momentum, yet we couldn't take out the high of that bar, not once, but twice, suggesting to me that there is going to be a pullback. Where's that pullback going? Well, again, I isolate the monthly pivot because it's untested, number one, and because it stands out like the proverbial dog's testicles. Let me put it that way. So then I see this bar on the weekly, which is a strong rejection bar. Okay, the weekly pivot of last week and the daily pivot of whenever that was. That makes sense to me. That horizontal level that I pointed out also makes sense to me. This one here, right? So why wouldn't I be thinking, okay, short is probably the way to go here? Then look at the daily. And on Thursday, we got a game change bar. Then we got this bar that only went to support and no further. Now, do I want to trade in support? Answer no. But if I can find a way to trade to support and take profit along with my bias, which is now short, right? Reversal bar, weekly chart, off resistance, reversal bar, all makes sense to me. So all I need to do is find a way to get in. 4-hour chart, what's it telling me? Well, quite nonsensically, there's nothing there that suggests to me that I can go short right now. In fact, quite the reverse. You will note, I'm sure, and I'll point it out if you don't, that there is now the potential for this to range. 2 equal highs, 2 equal lows. So I can't go short here, just can't. But what I can do is wait until we hit the top of this range and then look to go short. So it's a matter of waiting. This is a 4-hour chart. I'll be another year older. No, I won't. It'll be the end of the week, I would imagine, certainly middle of the week, before I look to trade this short. But that's my bias on the NASDAQ. If it breaks this level and retests it, then I can jump in. But at the moment, I've got a box range, and the way I trade box ranges is top to bottom, bottom to top. So really, I could actually find an entry long here to trade it up to here, then look for the shorts. So I know, Lewis, yeah, nothing happened until tomorrow night. What's tomorrow night? There'll be a news event. I haven't really looked at the Forex factory. Let's do that quickly. It'll be on that one. Tomorrow night. Okay. What's on tomorrow night? Services PMI out of the States. We've got CAD news. What are we trading? NASDAQ. So probably this one. CAD news, pound's not going to evolve too much, I wouldn't have thought. So, yeah, maybe. And, of course, we haven't got a US session tonight. So, yes, market comes back to life tomorrow night, US time. So, tomorrow day, US time, our time, tomorrow night. So, I get what you're saying, Lewis, absolutely get what you're saying. But, yeah, I'm long to get short. I think that's my bias at the moment because it makes sense to me. Strong support level. We've bounced off it. Really, I'm looking for a higher low here, and I'm going to have a look at what George has said with these outside. I've never considered them right. I miss a lot of setups because I don't get the right setup here. I'm going to have a strong look at this in review and look at the recording and see exactly how he's worked that out. And believe me, he spent a lot of time on it. And if he says it's right, pay attention. Okay. I was going to share with you a couple of other things, right? The euro. You know about the euro versus the Swissy. That's just hovering around entry at the moment on the daily chart. When I trade this on daily, yeah, daily, that reversal bar. I think Euro Aussie is also interesting. And if I have a look at the monthly chart on Euro Aussie, I see this incredible, I don't know what it looks like, what's that place in Paris? Eiffel Tower. That's what it looks like to me, right? But then I drill down a little bit further and I see this, and then I see this, resistance here, mess here, false break of support. It's just been a level that the market tends to look at or react off. I'll put it that way. If you go a little bit wider, you can see exactly what happened here. bang, 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 and then completely bang, came back to that level view. So the level's relevant, right? That's what I'm trying to point out. So have we come off that level? Answer, yes, we have. And we've got a lower low, a lower high, buggier. Now you put a spanner in the works by giving me a higher low. But that trend line or trade line that I put in before is super interesting, and we've had a good rejection bar off that. You can see price reacting off that at the moment, and we're getting a bit of a sell here. What I need to see to trade this, and I want to trade it short, is a lower high to start with, but probably moreover a break of these pivots. You can see the pivots are lined up actually perfectly to go long. Daily pivot above weekly, above monthly. So that's suggesting that the trend is up. And I get that because the momentum is up and we've got a higher low, right? But that's not where I'm at. I'm at bouncing off this trade line, coming through these pivots and giving us a retest. So that's what I want to see. I want to see price come down to here, bounce back to the pivots, maybe the weekly. Let's go in the middle, why not? And give me the lower high in here, and then I'll look to trade it short. Euro versus the CAD. Last week, this was probably prime territory for me. I was looking for a short here, and I think I did place an order short on that bar, and then again on that bar. Neither of them triggered. I'm still of the opinion that we've got a very toppy scenario here. And again, I'm looking for a lower high. I've already got one. Maybe this was the false one. Remember, George was talking about that before. Maybe this is not the first. The first one is not the best one. Maybe we get a better one, and maybe we're on our way to that. But then I look at this, and I see exactly what I don't want to see, which is a potential false break of that support trade line. So if this candle today was to be bearish, that would really say to me we've got a false break scenario here. That's probably not a bad thing because price will then rally, in my opinion. And if it doesn't take out these highs, it will give me the lower high that I'm looking for. So that's absolutely on my watch list, Euro CAD. And had this not broken above here, I would have been short underneath it anyway, but it has closed above it, so I can't do anything about it until I see that lower high now. Not based on that, but based on this triple top, if you like. So I need to see that in this vicinity, and then I'd look to go short. So they're the kind of things that I am looking at for the week. There's a whole bunch of stuff that I'm looking at. Look, it does look like the euro's in trouble, but at the moment, we're seeing it rally, which is good because what that does is give us a far better price to trade it, right? And that's exactly my thesis for the week. Looking to trade the euro short against the Swissy, the Aussie, not so much the Aussie, but the CAD certainly. Aussie's in there. Euro Kiwi, we're trying to trade this short again as a bounce off this broadening pattern. It's broken out. It looks like it's going to close above it, so I'll pay attention again, looking for it to come back underneath this level and retest it. Wow, I'm going to have a busy week. I wish I had time to stay in front of the charts every 5 minutes. Today is Monday, and I'm not a Monday trader per se, although I've got 3 orders in the market. But they're on daily charts and weekly charts, so it's not a big issue. I think I'll certainly give the 30-minute charts and the hourly charts a miss for the rest of the day because we've got no US session. We haven't had a lot of movement thus far. We'll stick with that gold breakout scenario. Don't know how that's going at the moment. It hasn't triggered, and I'll leave it at that. Hopefully, the other ones that we've got in the market produce some results overnight. Guys, thank you very much for being our trading buddies today. George, contribution, magnificent, really enjoyed it. And Catherine, thank you for your questions. And everybody, if you want to comment, you want to make yourself known or ask a question, feel free to do so. Really, really, it's all about you, not about us. We're just here to do the yapping. Have a great week ahead. We look forward to your company on Thursday, and we look forward to some nice profits before then. Have a great week ahead, guys. Bye-bye for now. See you.